Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
Welcome back to Expert Money Matters. I'm your host, Georgina. At Chase Buchanan, we monitor global market shifts to turn uncertainty into opportunity. To provide you with total clarity, we've transformed our weekly market update email into this convenient audio format. Here is your weekly market update for February the 25th.
Good morning, or good afternoon, depending on where in the world you are. A lot has happened since Monday, so let's get straight into it. The biggest story this week came from the United States Supreme Court in a 6-3 decision. The court struck down the legal foundation for President Trump's emergency tariff program, ruling that the power to levy tariffs belongs to Congress, not the president. The administration responded immediately, within hours, by replacing the invalidated tariffs with a new 10% global import surcharge under a different law. And the president has since signalled he wants to push that to the maximum allowable rate of 15%. So the tariffs aren't gone. The legal basis has simply shifted, and trade uncertainty is very much here to stay. Turning to how markets reacted, Wall Street took the news in its stride. Stocks were broadly higher on Tuesday. The S&P 500 up around 0.8%, the Dow adding about 370 points. Consumer confidence also came in better than expected, which helped the mood. In Asia this morning, markets have extended that recovery. The Nikkei up nearly 2%. South Korea and Taiwan also higher. European equities are expected to open in positive territory. On the topic of artificial intelligence, which has dominated market sentiment for the past month, there are signs this week that the selloff may be stabilizing. Anthropic, the AI company behind Claude, sought to clarify that its tools are designed to work alongside existing businesses, not replace them. Nvidia's CEO Jensen Huang put it even more bluntly. He called the idea that software is in terminal decline, quote, the most illogical thing in the world. Markets appeared to agree, at least for now, with beaten down software stocks bouncing over 1% on the Nasdaq. And that brings us neatly to Nvidia itself, which reports its quarterly earnings this evening. All eyes will be on the numbers. Analysts are expecting revenues of around $65.7 billion, up 67% year on year, with earnings per share of $1.53. Nvidia has beaten expectations 12 quarters in a row, so the bar is high. The bigger question is guidance. What does management say about chip demand going forward, the Blackwell architecture ramp, and whether sales to China might resume after months of restrictions? Whatever Jensen Huang says tonight could set the tone for the technology sector well into spring. Closer to home in the United Kingdom, the big talking point this week was pensions. Reform UK's deputy leader, Richard Tice, proposed taking the £500 billion held in the local government pensions scheme and redirecting them into a sovereign wealth fund focused on domestic investment. The pensions industry pushed back hard. The core argument against it: those assets exist solely to fund retirements, not to serve government priorities. Forcing capital into domestic projects risks lower returns, and that ultimately means higher costs for councils and worse outcomes for retirees. For now, this is a political proposal, not policy, but it is worth watching as a signal of where the political mood is heading. For those of you managing finances across borders, there are two regulatory changes worth having on your radar. The One Big Beautiful Bill Act, enacted earlier this year, introduced a 1% tax on certain cash-based transfers from the United States. The good news, standard bank transfers are exempt. This primarily affects those sending physical instruments, cash or money orders, rather than digital bank payments. The second point is more significant for higher earners. There is what advisors are calling the AMT Trap. If you are earning above $200,000, the foreign earned income exclusion may interact poorly with the alternative minimum tax, creating a surprise tax bill. Switching to the foreign tax credit is increasingly the recommended approach. If this applies to you, it is well worth a conversation with a specialist before you file. Finally, a quick look at what is coming up on the rates front. The Bank of England meets on the 19th of March. Markets are currently pricing in an 85% chance of another cut, which would take bank rate down to 3.5%, supported by UK inflation falling to a 10-month low of 3%. The Federal Reserve also meets in mid-March, with the first US rate cut expected around the summer and 2 cuts priced in for the year as a whole. To bring it all together, the tariff story has changed shape, but it hasn't gone away. The AI-driven sell-off in software stocks may have found a flaw, and Nvidia's results tonight could define market sentiment for the weeks ahead.
And that wraps up this week's Market Snapshot. If you'd prefer to get the information before it's published here, you can sign up for the update directly on our website. Just visit chasebuchanan.com and subscribe and get the update delivered straight to your inbox, giving you a head start on the week. Thanks for listening to Expert Money Matters. I'm Georgina. Join us next time as we explore money matters for your life abroad.